Good morning, and thanks for joining us for a Tax Practitioners Board webinar. My name is Ashley Dowsard, and I'm joining you from Ngunnawal and Ngambri country. I respectfully acknowledge the traditional owners and custodians of country throughout Australia and their continuing connection to land, waters, and community. I'd like to pay my respect to them and their cultures and elders, past and present. To begin, I have a few housekeeping messages. First, to obtain a copy of today's slides, you can visit our Webinars Resources Hub at tpb.gov.au/webinar-hub. We'll also email you a copy of the slides. Today's webinar counts towards your continuing professional education or CPE, and you can claim 1 hour for attending. In relation to claiming your CPE, we will issue an attendance certificate to those staying on for the duration of the webinar. Today, we will look at some of the new obligations under the Code Determination. We'll discuss the reason for these new obligations, when they come into effect, and the new requirements relating to conflicts of interest and confidentiality with government, keeping proper client records, competency, and finally, quality management systems. Then we'll finish with a panel discussion and answer your questions. We have Daniel and Eddie from our policy and legislation team online responding to your questions as we go. So please submit them using the Q&A. We have a lot of people online today, so we may not get to all of your questions. However, we will have FAQs available on our website following the webinar. You can also use the chat function to speak with other participants. We won't be monitoring the chat closely throughout the presentation. So if you want a response from us, be sure to use the Q&A. To disable any of these functions, simply hover over the relevant icon and unselect Show Preview. Also, a reminder to keep your comments courteous and professional. Now, I'd like to introduce our speaker and panelists for today, Peter DeCure, TPB Chair, and Tariq Kumar, the TPB's Director of Policy. Welcome. Peter, I'll hand over to you to get us started.
Thanks, Ashley, and good morning, everybody, and thanks for joining us today. Today's webinar is an ongoing part of our program to assist with the understanding of the new obligations under the Ministerial Code Determination, and specifically, as Ashley said, we'll be talking about conflicts of interest and confidentiality when dealing with or working for government. We'll be dealing with keeping proper client records, competency, and with quality management systems. As I'm sure a lot of you are aware, we've concluded 2 other sessions on the determination in the last week. You can access the recordings via YouTube or from our website, and we'll send out the links to everybody who's in attendance after the webinar today. I genuinely understand that there are some ongoing concerns in relation to the new obligations, but again, I really want to assure everybody that we've worked very hard with the consultation process, with the professional associations, with Treasury and with the government to try and make sure that the changes are going to be implemented in a way that's fit for purpose and are supporting the profession in their day in, day out implementation of the changes. So just to get started, I'll begin by outlining the 8 new obligations under the Ministerial Determination. These obligations are upholding and promoting ethical standards of the tax profession, obligations in relation to not making false or misleading statements, obligations in relation to declaration and conflict of interest and management of conflict of interest, particularly with activities undertaken for government, maintaining confidentiality in your dealings with government as well as your clients, keeping proper client records, ensuring that tax agent services that are provided by you or on your behalf are provided competently, the implementation of quality management systems, and obligations in relation to keeping clients informed. These 8 obligations are already consistent with the existing 5 key principles of the Code of Conduct. They also leverage from the material work of some of the professional bodies, in particular the Accounting Professional Ethics Standards Board, which has developed significant guidance in relation to these matters, and their guidance is generally useful in relation to your obligations under the ministerial determination. So let's jump forward and start to talk about the specifics of the determination. Firstly, the application date. As I'm sure you're all aware by now, for the larger firms with 100 or with more than 100 employees, these obligations started from 1 July, January 2025, i.e. for the big firms already in place. For all other smaller tax practitioners, i.e. with 100 or less employees, the new obligations will commence from 1 July 2025. So let's jump into managing conflicts of interest in dealings with government. Section 20 of the new determination requires you, in relation to any activities that you undertake for the Australian government, for the government or a government agency in your professional capacity, firstly, to take reasonable steps to identify any material conflict of interest, real or apparent, in connection with the activity undertaken for the agency. Secondly, to disclose the details of any material conflict of interest, real or apparent, identified in relation to those activities. And thirdly, you're obligated to take reasonable steps to manage or mitigate and, where appropriate, potentially avoid the material conflict of interest that you have identified in relation to those activities undertaken for the government agency. And the only exception here is to the extent that the agency has expressly agreed with you otherwise. The obligation is intended to assist in minimising potential adverse impacts to government agencies where a tax practitioner has a conflict of interest in connection with an activity undertaken for that government agency. Like in Code Item 5, it does not prohibit you from having a conflict of interest. We recognise that those exist, but it obligates you firstly to disclose and to take appropriate action to manage and mitigate those conflicts of interest. In some cases, regardless of whatever arrangements are put in place, the conflict may be such that it cannot be managed, and you should not continue to undertake that activity with the government agency in your professional capacity. This will generally require you to decline the engagement unless the government agency has expressly agreed to accept a particular conflict in a specific set of circumstances. In circumstances where you identify a close material conflict of interest to the government agency, the agency does have the discretion whether to continue to engage, having regard to the nature of the conflict and any steps taken by you to manage and or mitigate the conflict. So let's have a look at a case study in relation to management of conflicts of interest. In this case study, Anne is a tax agent and a partner in a large consulting firm. She's been asked to participate in a confidential consultation led by a government agency in relation to some proposed draft legislation. If implemented, these rules would clearly apply to her and her firm's clients. Anne's aware that there's a potential conflict and identifies from the papers she's given and the proposal she's given that if the new integrity measures were to take effect, they would adversely impact the tax affairs of some of her clients. She's clearly identified and is aware of a material conflict of interest. She chooses not to document this conflict of interest, nor does she disclose it to the government agency. She takes no further steps to mitigate or avoid the conflict of interest and continues in the consultation process. So let's have a show of thumbs up if you think Anne has met her obligations and a surprised emoji if you think she hasn't. It's pretty clear that under these circumstances, she hasn't met her obligations under the code item. So, and it's clear from your reactions that you agree with that conclusion. So she's breached her obligation under Section 20 of the determination. She's clearly aware of and has identified that there's a material conflict of interest, and she's failed to take any of the necessary steps to either document, disclose, or manage the conflict. In breaching Section 20 of the determination, Anne is clearly in breach of her TASA responsibilities. And further, if the confidential information is used to financially benefit herself or any of her clients, the TPB would be open to find that she's failed to act with honesty and integrity and may well consider her to be no longer a fit and proper person to be registered as a tax agent. Let's move on now and talk about your obligations in terms of maintaining confidentiality in all of your dealings with government agencies. The first obligation, subject to some exceptions, you must not disclose any information received directly or indirectly from an Australian government agency in connection with any activities that you undertake with that agency in your professional capacity. This applies whether you're being paid or whether you're doing the work on a voluntary basis. The exceptions being where there is either a legal duty to disclose the information or the further disclosure was authorised by the agency and that further disclosure was done consistent with the authorising agency's authorisation. Now, that may apply in circumstances where you're representing, say, a professional body and the government agency has authorised you to disclose some information through the networks of the professional body for purposes of consultation. A second obligation is, again, subject to some exceptions. You must not use any information that you receive directly or indirectly in connection with any activities you undertake with a professional agency to your own personal advantage or professional advantage, or for the advantage of your employees, employer, or a client. The exception again for this second obligation under Section 25 is in instances where the government agency has authorised for the information to be used in that way, such that it provides that personal advantage. The obligation is intended to protect against unauthorised disclosure and improper use by registered tax practitioners of information that is provided to them in relation to the consultation activities undertaken with an Australian government agency. It applies to information received directly or indirectly by the practitioner from the government agency, and as such, through staff working with the agency on behalf of the registered tax practitioner. It's important to note the obligation does not apply to information released to the public, activities or interactions of a personal nature, or generic taxpayer-specific information. Further, it does not apply where the registered tax practitioner engages with an agency for or on behalf of a client, as it would be reasonable to consider that the information received from the agency was authorised for disclosure to the client. So let's jump forward now and start talking about your obligations in relation to keeping proper client records. Keeping proper client records requires that all tax agent services maintain adequate records to demonstrate and to authenticate the services that have been provided to their clients in each and every instance of service. The records must be in the English language or easily convertible to English. They must be retained for at least 5 years after the service has been provided. Now, this aligns with the existing standard timeframes for record keeping under Australian tax law. And I would emphasise that the time the service is provided might be the time that a return's lodged or the time that a specific piece of advice, say some CGT advice or BAS advice, are given. So the 5-year period starts from the time that advice is given or perhaps the return is lodged. The records should show the nature, scope and outcome of the tax agent service provided. So in this instance, the outcome would be potentially a copy of a tax return or a copy of a file note in relation to some advice or a letter of advice, in fact. They should reference the information reasonably considered in the provision of the tax agent service and include all advice and information received from the client. They should include all advice provided to the client, and for more complex matters, the relevant facts and assumptions and reasoning underpinning any advice provided to the client. So what we would expect there is that you have some record of the research you've done, the tax rulings you may have relied on, any tax cases or any other reading materials that you've used to evidence your service. And I would emphasise, if you're relying on information that's published on the ATO website, it's always smart to take a screenshot of the relevant ATO advice, because from time to time the ATO can change their positions on things. Obviously, you would all understand that proper record keeping is an essential part of any tax practice. It explains and evidences the actions, decisions, and advice that you've provided, and helps to demonstrate that you're doing so in a competent and appropriate professional manner. By complying with this obligation, you'll be able to refer to your records as evidence of your actions and clarify what actions have been taken in the event that it's ever questioned. Relevantly, registered practitioners do not need to maintain separate records for different services if the same record explains more than one service. So that might relate, an engagement letter, for instance, covering off all of the services you provide, clearly relates to more than one service. And you're definitely not required to keep duplicate records of the general accounting records of a client. So there's no requirement to keep copies of clients' general ledgers or those sort of things, but just keep enough to make sure that you can demonstrate the advice or tax services that you have provided. Okay, let's have a look at our next case study in relation to keeping proper records. So Sandra's a registered agent who was engaged last year by Rick to complete his income tax return. In the current year, Sandra received a letter from another tax practitioner advising that Rick had engaged them to complete this year's tax return on his behalf, and requested all of Rick's records that were held by Sandra to be passed across. Sandra appropriately obtained Rick's consent before providing any of his records to the new practitioner. All of that now done, Sandra is still obligated to maintain and retain copies of records, for example, including her own working papers relating to the tax agent services she provided to Rick in preparing and lodging his income tax return for the prior year. She's obligated to securely store those records in order and retain those records for 5 years post the lodgement of last year's return. And she's obligated to ensure that those records are readily accessible and that she is able to recover them at a later time if required. Let's move forward and talk about ensuring that tax agent services are provided competently when they're provided either by yourself or on your own behalf, on behalf of you, by your staff. The concepts contained in this obligation are genuinely consistent with a number of other sections of the TASA, which you will already be familiar with. In particular, Code Item 7 and the requirement to have sufficient number of tax practitioners to carry out adequate supervisory arrangements within your practice. The code determination also extends these obligations, though, to ensure that each entity providing tax or BAS agent services on your behalf maintains knowledge and skills relevant to the services that are being provided and are appropriately supervised, having regard to the knowledge and skills of the entity, the tax agent services being provided by the entity, and to your own system of quality management. This means that an entity, for instance, an employee, is not required to have detailed knowledge and skills in relation to all of the services that are provided, but must have sufficient knowledge and skills appropriate to the services that that employee is providing on your behalf. Also, the level of supervision that's appropriate will differ from entity to entity and depend on the knowledge and skills of the relevant employees and the people providing tax agent services on behalf of that practice, and will also be dependent on your own level of internal controls. As we've discussed, the code determination requires that records that correctly record the tax agent services on your behalf for each client, including former clients, are maintained. So let's have a look at another case study here. In this scenario, we have XYZ Proprietary Limited, a registered tax agent since 2018. Stephen's a registered agent. He's the sole director of the company and the nominated supervising agent. Amanda has recently joined XYZ and provides tax agent services on the company's behalf, but she's not a registered tax or BAS agent in her own right. Amanda has limited knowledge and experience in providing the types of tax agent services that XYZ provides for the clients. As the nominated supervising agent for XYZ, Stephen is responsible for the supervision and control of Amanda's work, and we note that Amanda is located in an interstate office. As part of his supervisory arrangements, Stephen undertakes spot checks of Amanda's work intermittently, has infrequent online check-ins with Amanda. Often these check-ins are cancelled. Has provided Amanda with a suite of outdated training material, but has not undertaken any specific training or mentoring with Amanda, and has no remote supervisory arrangement or plan in place. Let's show a thumbs up if you think XYZ has met its obligations, or a surprised emoji if you think he's missing the boat. I think it's pretty clear that you all think that this is not adequate supervision and control under these circumstances. And what I would stress is that appropriate supervision and control really is the required to make sure that the services that are provided by you or your staff on your behalf are appropriately competent in the circumstances. It's clear that in these circumstances, the TPB would be unhappy and would not be satisfied that XYZ had met its requirements. The factors that the TPB would take into account include the fact that Amanda has limited knowledge and experience in the type of services that XYZ is normally providing, that there is no plan in place setting out the nature of the supervisory arrangement required, that contact with Amanda, including intermittent spot checks, is inadequate for supervision and is irregular and insufficient. We would also note that the training materials provided to Amanda are out of date, and we will also note that there's no agreed schedule for check-ins or for training or review of work undertaken on behalf of Amanda. It seems really clear to me that XYZ is not meeting its obligations, and in these circumstances, we would expect a lot more of the registered agent responsible for supervision. So let's jump forward now and start talking about quality management systems under Section 40. The ministerial determination has established the requirement for all practices to have a quality management system in place. Now, in relation to all tax and BAS agent services provided, the system of quality management is intended to provide you and the TPB with reasonable confidence that you are complying with your obligations under the Code of Conduct. You must also document and enforce policies and procedures around your system of quality management. So the items that should be included in the system of quality management include items in relation to governance and leadership of your practice, how you go about monitoring your performance in relation to meeting obligations under the code. It needs to be clear that the quality management system requires you to be adhering with the obligations under the Code of Conduct. It should refer to how client engagements are managed. It should refer to proper record keeping, protecting confidentiality of information, both of your clients and of government when working with government. It should include a policy in relation to how you manage conflicts of interest and policies and procedures in relation to recruitment and training and management of employees. The extent of internal controls in place will differ significantly between tax practitioners, and the TPB's expectations of practices will be different depending on the size of the individual practices, the level of day-to-day engagement by the registered practitioner or the tax agent services being provided, and the complexity of the services being provided, as well as the complexity of the client's affairs. So for a small practitioner who's hands-on involved with all of his clients and all of his staff, supervising all of the work, then we would expect a less sophisticated system. For a larger practice where there's more delegation, we would expect a much more sophisticated quality management system to be implemented to ensure that all requirements of the code are being met. We would emphasise that we think these requirements are good for your practice in terms of making sure that you're running a good professional practice and managing risks appropriately. And we also think that these quality management systems will significantly assist you in relation to any PI claims or the management of your own PI policies that may come up in the course of your day-to-day activities. For a large firm, as I said, we expect very sophisticated systems, extensive use of internal controls, extensive use of staff management systems. For a smaller or sole practitioner, it may be as simple as making sure that there are appropriate security and physical control over premises, filing cabinets, computer resources, cybersecurity arrangements. It's as simple as conducting appropriate conflict and proof of identity checks in relation to potential clients and re-engaging clients, and making sure that you're regularly updating software and patches to manage your own cybersecurity and ensure that information is secure and confidential. Further details about appropriate quality management systems and processes can be found in the standards released by the Accounting Professional and Ethical Standards Board, in particular APS 320. It's important to note, though, while the requirements of APS 320 are prescriptive, you should also ensure that your quality management system provides you with reasonable confidence that you are complying with your requirements under the TASA, including the Code of Conduct determination. Let's talk a little bit about policies and procedures that you need to consider in an organisational sense. So to make sure that you are in compliance with the code determination and the integrity, including policies and procedures, you should be thinking about things in recruitment, to making sure that you are recruiting people who have the right skills and qualifications and personal characteristics. You should have policies in relation to training. It doesn't mean that you have to do all the training or provide all of the training yourself. It's reasonable to expect that your staff do some external training, but you do need to have enough policy in place to make sure that you're monitoring what they're doing and that it's appropriate and adequate. You should have clear policies in relation to supervision of staff members and their work. You should have clear policies in relation to information sharing, reporting, record keeping, security of information, IT, human resources. In particular, how you deal with complaints is important, and maintaining a good workplace culture. You must exercise your own professional judgment in determining the appropriate level of controls that relate to your circumstances, including the size and nature of your practice and your clientele. You should also document and make sure that you implement the procedures of your quality management system. A quality management system is no good if it's just in a file on the shelf. It needs to be implemented, monitored, and if necessary, enforced. So let's jump on and move on and look at our next example. In this scenario, Coality Proprietary Limited is a medium-sized registered tax agent company. The company employs a mixture of registered agents and employees who are not registered with a TPB. Coality last reviewed and updated its quality management systems and procedures 5 years ago, including its documented policies and procedures relating to adherence to the Code of Conduct. Clearly, 5 years ago, its Code of Conduct policies and procedures will now be out of date. Coality doesn't provide in-house training to staff, but it advises their staff that they are responsible for their own training, but does not require those staff to maintain records of their training or report into quality about the training. Quality does also not conduct internal audits or reviews to assess whether those expectations are being met. Again, let's have a thumbs up or a surprised emoji if you think quality hasn't met its obligations. The emojis are giving me a pretty clear outcome that everybody is quite aware that quality's operations in this respect are not up to scratch. It's clear that there is a need for them to do far more. So they're not in their work, they've failed to enforce the expectation that staff are up to date. They've failed to provide any training in-house, and they haven't done anything to monitor their own compliance with their code obligations. In this instance, factors that the TPB would look at include policies and procedures regarding adherence to the code. Clearly, they haven't been adequately maintained and are now out of date. Quality does not actively monitor, enforce its expectation that registered tax agent employees complete CPE activities from the external providers regarding their code obligations. And the employees who are not registered haven't been provided any internal training, nor have they been supervised in relation to the expectation that they complete external activities. So clearly, Coality's got a fair bit of work to do. I'll leave it there and hand back to Julie, and we'll conduct back to Ashley, sorry, and we'll conduct our panel session.
Thanks, Peter. Thanks for that great overview. We'll now jump into some questions that have been coming through. I'll start with you, Peter. In the webinar, you spoke about certain situations where further disclosure of government information was permitted. Could you provide some examples of these situations?
Yeah, thanks, Ashley. It'd be reasonable to conclude that further disclosure is authorised in some circumstances. In particular, if you've had a casual conversation with an agency and there's been no expectation indicated to you that you shouldn't be on disclosing the information, it's clear that the information wasn't supplied to you in confidence. Where there's a reproduction or disclosure somehow else, whether some of this information is already in the public domain somehow, if the information provided to you is required to be disclosed under law, or if it's generally accepted that this sort of information would not need to be held in confidence. So if registered practitioners have any level of uncertainty around the disclosure, they really should seek guidance at the very outset from the government agency that they're engaged with to make sure that they fully understand the nature of the disclosure. So I think in the first instance, we've tried to emphasise that when you're engaging with a government agency, you should disclose any conflicts you've got. You should raise what actions you're taking in relation to conflicts. And if you're doing work, the smartest thing to do is to ask up front, is this information provided to me confidentially, sorry. So if you get a straight answer to that, you know where you sit. That I think is the easiest way to proceed.
Thanks, Peter. Tariq, I'll ask you this question. Under the record keeping obligations, can you please expand on what is meant by correctly recording a tax agent or BAS service provided?
Thanks, Ashley. Good question. Correctly recording means that the records accurately reflect the tax agent or BAS services and are without error to the extent possible. The obligation goes beyond ensuring the accuracy in the strict sense of the term. The records must correctly reflect the service provided in a broader sense. That is, the record should contain sufficient relevant details to explain or evidence the services provided. They must contain the nature, scope, and outcome of the service provided, and also include any references to information that was relied on or used.
Right. And
Actually, can I just sort of add, the sort of things that we're talking about, BAS returns that are lodged, tax returns that are lodged, FBT returns that are lodged. So, a copy of any of those things that's lodged with the ATO is clear, correct record keeping. When you're giving advice to your client, if you answer a question over the phone, you should have a file note, and your file note should accurately identify the advice that you gave. Now, we understand that from time to time there might be a mistake in a tax return, or there might be a there might be a mistake in a piece of advice. But what we want is for you to be able to demonstrate how you've gone about getting to those positions. So, as Tariq said, the information you've used, copies of tax rulings, or copies of articles, the research that you've done, and being able to reproduce that. So, if you've relied on an income tax ruling, you don't necessarily need a photocopy of it, but you need to have noted that you've read that ruling, that you've relied on that, what's in that ruling. So we're not trying to create files that are a million pages thick, but you need to be able to demonstrate what you did, what you considered, and how you got to the place you got to.
Peter. And can we store our records electronically?
Absolutely. Records are welcome to be kept electronically. The simple requirements are that they're organised in a way that they're easily retrievable, that they can be reproduced in the English language, and that they are maintained for 5 years after the tax service was provided. And obviously they should be securely stored.
Yes. Now, you mentioned about differing types of internal controls that may be necessary for large and small firms. So, what types of internal controls should small tax practitioner firms with staff consider to ensure competent services are provided to their clients?
Yeah, thanks, Ashley. I think some of the examples are, there needs to be a little bit of formality in your systems and your controls. So, we would expect that you would have a written policy on the professional standards that staff are expected to adhere to while providing tax agent services. There should be a process around verifying a client's identity. Whilst engagement letters aren't compulsory, we think that they're really an important part of demonstrating that you're adequately communicating with your clients and they understand the arrangements between yourself and them, in particular around things like managing conflicts of interest and confidentiality. You should clearly maintain physical control over filing cabinets, storage of documents, your own premises, etc. You need to have a dedicated conflict of interest management register for so that you can record and demonstrate that you are managing conflicts of interest appropriately. You should have a quality assurance process and supervisory arrangements to demonstrate how you are comfortable that you are lodging accurate tax, BAS, FBT returns, and you should be able to demonstrate what level of supervision and checking goes into those things. So things like checklists that are signed off when a reviewer reviews work, that sort of stuff is really useful. There should be evidence that a firm's internal controls and quality management systems are actually regularly reviewed. There should be evidence that these things are being implemented. So, for instance, when you've got a written policy about the professional standards that the staff are required to adhere to, you need to make sure that that policy is available to staff, it's given to them, and that they've acknowledged that they've had it. And that they, if asked, they would know where to go and get it. The simple things like that. We also really encourage everybody to make sure that they keep on top of cybersecurity by using, regularly updating their software, making sure that they, upload the patches and things that they get from their software providers, because this is a really fast-moving environment with software. The software providers do everything they can to assist. So make sure you're doing those updates and checks on a regular basis, and make sure that information is secure and maintained confidentially.
Thanks, Peter. Tariq, I might go to you for this question. If I offshore work to an overseas bookkeeper, what responsibilities do I have to supervise their work to ensure it's competent?
Thanks, Ashley. Well, first of all, to ensure you comply with your code obligations, You must obtain your client's permission to disclose information relating to their affairs to a third party, including if that third party is overseas or offshore. In terms of the supervision issue, you need to make sure that there are adequate supervisory and review arrangements in place. So, for example, some of the things could include training for offshore staff in Australian tax relevant to services they are providing, rotation of overseas staff to gain experience, appropriate quality assurance and review systems. There are registered tax practitioners involved in reviewing the work that's completed by the overseas individuals. And there are processes in place for staff to maintain, knowledge and skills relevant to the services they are providing. So in summary, two of the key considerations for offshoring would be client confidentiality and ensuring that adequate supervision and control in relation to those services provided on your behalf.
Right. And do the new requirements around staff providing services competently require us to provide unregistered staff with formal training?
Not necessarily. So this is a question that comes up quite a bit. Actually, we've got quite a bit of guidance on this. There is no necessarily any requirement for that formal training. The new obligations do not specify any particular method of how relevant knowledge and skills are to be maintained by those people providing services on your behalf. To determine what level of training is adequate and appropriate, each tax practitioner will need to consider the knowledge and skills of their staff member and the services that the staff member is authorised to perform. So it is a case-by-case assessment, and depending on that level of skill and knowledge, you may not necessarily need formal training.
Okay, thank you. Peter, I might ask you this one. What does the TPB consider as the types of records that should be kept for meeting the record keeping obligations under the determination?
Thanks, Ashley. Broadly speaking, the records cover all of the relevant details that sufficiently explain the tax agent services that are provided. And they're going to include things like details of the client or former client to whom the services were provided. So that, that's the typical name, address, contact details. The terms of the engagement for the services, these can be evidenced and are best evidenced by an engagement letter. Where appropriate, why the service was provided, including details of the relevant tax obligations involved. What the service involved, was it a tax FBT return? Was it a BAS return? Was it a letter of advice, or it might have been some detailed structuring advice? So enough information to know what the service was, and should include information around including the outcomes, the reasons for any decisions made, the reasons for any advice provided, who provided the advice within your firm. You should have details of all of your communications with the client, be that file notes of phone calls, copies of emails, copies of written correspondence, etc. You should be able to demonstrate who provided the service in your practice, and if it was provided by a staff member, who and how that was supervised, the key dates when the services were provided, and the date when the record was made, so that we know when the 5-year period should start from.
Right. So the conflict of interest and confidentiality obligations in relations to dealing with government apply to activities undertaken in a professional capacity. Can you please give us some examples of what professional capacity might include?
Actually, I think it's often going to be around consultation with government, in particular in relation to either the development of new law or the interpretation or application of existing tax laws. So that's often going to happen through formal consultation processes between the profession and either Treasury, the ATO, etc. And there will often be, requests for specific expert advice. So it could be an agent giving specific advice to the ATO or Treasury about how they think a piece of law might work or what might be the implications of a change to the law. It could include, providing assistance and advice on appropriate strategy for government to be considering. It could be advice in relation to perhaps accounting standards and or information technology services, how they are interacting with tax law and the provision of tax services and interacting with government on those things. It could be in relation to overseeing government functions or internal audit work or those sort of things. So there's a wide range of things that you would do in your professional capacity. Clearly, we've said, when you are interacting with government, i.e. through the ATO in particular, on behalf of your client, then you're acting for your clients rather than acting for government. So you'll be able to extend any information that you glean to your client because you've gone to government acting specifically for your client.
And how can a tax practitioner safely manage and mitigate a conflict of interest?
I think in the first instance, as we've said, you've got to identify that the conflict exists. Once you've got it, you should be disclosing it, and then setting out to assess and evaluate, firstly, the materiality of the conflict and whether it is actually able to be managed. So, in some instances, the conflict might be so substantial that it's not possible for you to be involved in providing services where that conflict is so significant. And it might be, that you have a really material personal interest in the outcome of something. So, I think you've got to be really careful to assess first. Some of the things that you could do within a practice, if you within a practice you had clients that had conflicting interests, you would make sure that you had separate teams working on those separate clients. You would make sure that the clients were aware that you had this potential conflict and what action you were taking. It would clearly be inappropriate to have a member of your staff who had a personal or commercial relationship with a client also advising that client. So it comes down to those simple things about figuring out where the lines of conflict are, what it is that you can do to manage the conflict, protect the client from that conflict. And if you can't manage it, then it sometimes gets to the point where you say, well, we can't act in these circumstances.
Right.
The other, finally, you should always make sure that you've got a documented confidentiality, a conflict of interest register that's updated and records what you have done about managing conflicts.
Thanks, Peter. We've had another question come through. I might ask you, Tariq. If a practitioner fails to identify a conflict of interest genuinely, what's the penalty likely to be?
Yeah, thanks, Ashley. So obviously it will depend on all the circumstances in play, but if the practitioner has, mechanisms in place that Peter has spoken about around identifying and managing conflicts of interest, and there's been a genuine oversight there, I think, defer to Peter, but I think we'd be likely to take an educative approach there. The circumstances where you're likely to be in breach of the code is where you don't have those mechanisms, procedures, and policies in place around conflicts that Peter has spoken about.
Tariq, I think that's exactly right. And the TPB is not in the business of running around trying to trip people up for having made genuine errors. When a genuine error is made or something that comes to our attention that's been inadvertent problem has arisen, what we look to is to see that the practitioner's patterns of behaviour demonstrate a desire to and a professional relationship with complying with their obligations under the Code of Conduct. And if you've got policies and procedures in place, if it's an aberrant sort of thing that's happened once, we can see that there's compliance normally. As Tariq says, we'll go down the path of education and reminding people. Where we issue significant penalties is when people are deliberately and repeatedly doing the wrong thing, where they just have disregard for policies and procedures, where they're not trying to keep up with the code. So, I think the majority of practitioners don't have much to worry about because most of you are doing the things that we ask of you.
Thanks, Peter. We have time for a couple more questions on record keeping. Are there any issues keeping records longer than 5 years?
Well, from the perspective of compliance with the code, I don't think there are issues with keeping them. I do think, in terms of good business management and protecting yourself and protecting the confidentiality of your clients and former clients, I think it's best to have good record management systems in place and to make sure that, one, that your clients have a knowledge of how long you're keeping their records for, and two, I think cleaning out records when they're no longer required uh, is good in terms of your own risk management. It's good for your relationship with your PI insurers, and it helps to manage your own costs.
Thanks, Peter. And on keeping records, Tariq, what is the advice in regards to any losses?
So the record keeping requirements, to clarify, that we've spoken about today, they deal with records of tax agent services provided under our legislation, the Tax Agent Services Act. When you're dealing with questions around how long a particular record must be kept under a relevant tax law, so look, laws dealing with losses, for example, they would be ones that are administered by the Australian Taxation Office. So you'd want to check. There might be different laws in relation to losses or different provisions. So again, we've spoken about the tax agent services generally. So if the losses are a part of, the service that you've provided, then our requirements are at least 5 years. In relation to any record keeping requirements in relation to that particular provision, you'd want to check with the tax office.
Right.
It also raises an interesting question. We know in the last 5 or so years in Australia, we've had a few natural disasters with some bushfires and floods and things. So from time to time, practitioners are going to be in a position where records they should have available to them have been lost or destroyed. Now, if you find yourself in that position, the thing that I would encourage you to do is take reasonable steps to re-establish your record base. And that might be, reasonable steps might be things like next time in the next year when your clients are coming back to you, perhaps ask them for copies of their returns if your copy has been destroyed. Perhaps ask them for their copy of a letter of advice that you've given to them. I don't think we'd be expecting somebody whose practice was burnt down to be able to recreate everything, but smart, simple things you can do to help yourself would be great.
Some great advice. Now, Tariq, before we wrap up, do you have any closing comments?
Ashley. So we've spoken about 3 or 4 different obligations under the code determination today. For a lot of the smaller tax practitioners, these obligations won't commence until 1 July 2025. So there is a lot of material on our website. There's dedicated information products to each particular obligation. We'll soon be publishing additional fact sheets and frequently asked questions as well. So I encourage everyone to have a look at that if you're unsure about any of the requirements.
Thanks, Tariq. And Peter, I'll let you have the last word in today's formal presentation. Did you have any closing comments?
Yeah, thanks, Ashley. Again, I think what I'm really keen to emphasise is that we understand that the new determination code provisions have challenged agents and BAS agents, trying really hard to emphasise that we do understand the majority of you are doing the right thing on a daily basis. What we're hoping to achieve through this is for you to understand that it's practical, it'll be pragmatically implemented, and most of these things should be done in the right proportionality to your own size of practice. And we're simply looking for you to continue to implement appropriate professional policies, procedures, and practices in your own day-to-day activities. And you shouldn't be looking over your shoulder for us to come knocking every 5 minutes.
Wonderful. So if you'd like more information and to keep up to date, visit our website at tpb.gov.au. You can also follow us on LinkedIn and Facebook. We also have a newsletter that goes out each month called TPB e-News, which you can subscribe to at tpb.gov.au/newsroom. You can subscribe to our YouTube channel to receive notifications when we post new videos. We record all our webinars and have a comprehensive library of webinars available for you to view at your leisure. You can still claim CPE for viewing these videos. A big thank you to Peter and Tariq for sharing your insights today, and also to Daniel and Etty for assisting with the questions. Don't forget, today's webinar can count towards your CPE and you can claim 1 hour for attending today. Before we finish up, I'll be launching an exit survey. We'd appreciate it if you could take the time to complete the exit survey. It only takes a moment, and your feedback will help us to improve our webinars and let us know the topics that are of interest to you. The survey will open in your browser once you leave the webinar. Once again, thank you for joining us today, and we hope to connect with you again soon. Have a good afternoon.